So, my friends, how much are you up in the last 2 years? I invite you to look at your portfolio from October of 2020 and see what it is now. All right. So I looked at the S&P 500. It was at about 3310, October 29th, 2020. Now it's at 3750, October, I think today's the 21st, 2022. That's without dividends. Interesting. So in 2 years' time, you've actually made about 12% in 2 years' time, with a 20-odd% decline as well. It's pretty interesting, is it not? So the stock market in of itself, well, everyone's freaking out. Well, down, we'll just say 25% at one point. You're still in the black with a 25% decline. Yeah. Perspective, amigos. Perspective. So, should you sell? No, I mean, look, you got to do what you got to do. I mean, I'm not expecting big returns, as I said before. I expect, no. I expect stocks to give us about 6 to 6.5% growth of inflation. Hey, boys, oh my land, look at this guy. Oh, that's a dead squirrel. Come on, don't look at this guy. Look at him. Oh, come on, look at him. Ah, he's so strong, this guy. Look at that. It's like the strongest, it's like freaking, man, he's a strong guy. I was actually pretty strong too when he wants to be a big old knucklehead. Anyway, so you're still up 12.5% in the S&P 500. That's not including dividends being reinvested. I get it. It's always a scare story. You know, I read Zero Hedge. I read the stuff. I read this, that, and the other. Oh my goodness. We're running out of energy. We're running out of this, running out of that. I mean, this time it might be true. There's always a scare story. There's always a reason to sell. Always is. At some point, the empire will fall, and we'll say, that was, should have got out. Look, I was reading a story today. The guy's talking about, what was he talking about? He's talking about the yields. Yeah, he's talking about the yields and that if the Treasury bond has no liquidity, we're all done for, and, there is no, and I 100%. It's like, so it was weird. He kind of went back and forth a little bit, but it's a very interesting article, actually. I enjoyed it very much. I'll probably do a little bit of video on it. But he's like, look, if the Treasury market ceases to exist, essentially, it's all over. So why worry about that? That's what I was telling these people today. It's like, man, because these guys are doing fine. Actually, it's ironic. 2 consecutive couples from Illinois, both almost identical positions, about 15 years apart in age. So it's interesting. Neither should be doing Roth conversions because they both have too much money in their IRAs right now, and just doesn't make sense, which is very frustrating for me because when I show people the beauty of Roth conversions in a way that makes sense, I feel like I'm the man of the hour. When I show people, like, look, you can do Roth conversions and eliminate all taxes, but it's going to cost you $1 million up front, for the next 5, 6, 7 years. Yeah, it doesn't make me feel so good, especially when you're not in a high tax bracket anyway, or at the least effective tax rate. Anyway, so I was telling one of these guys, so look, man, I get it. The bonds scary, stocks scary. I like, we're talking about annuities. I said, buying some fixed annuities. In a worst case scenario, you're doing fine. Now, the real worst case scenario is that, the freaking insurance companies goes bankrupt, and if the insurance companies goes bankrupt, we're all screwed anyway. The interesting thing, of course, is that the insurance companies are in a better place now because of the higher interest rates. Insurance companies are the ones that buy the government bonds, in particular pensions and insurance companies. So now that the rates are higher, they're much more solidified in terms of the capitalization and whatnot. The U.S. government isn't. That's why I expect the interest rates to not be raised much more. That's why I'm actually a bull on bonds, actually. But anyway, interesting. If the Treasury market falls off a cliff, we're all done. There is no Federal Reserve to rescue. It's just not going to happen. And look, I'm not expecting that at all. I just think there's too much money to be made in corporate America by selling goods that consumers want to buy, man. And as long as that continues to happen, there's going to be profits, there's going to be employment, there's going to be earnings, there's going to be dividends paid. So, when you hear all the crazies, just say, all right, we've heard this just every year. You could look at a headline every single year. It's all panic all the time. I gotta watch myself when I read this stuff, when I read Zero Hedge. So like, it's like, remember I said California was gonna go blackout? It didn't happen. It will eventually, I get you. And it just didn't happen. What if electricity prices come down in Europe, like where no one's expecting? Right now, the price of natural gas is dropping anyway. Why? I don't know. It's not because of strategic reserve opening, but it is. So what if these guys are wrong and things turn out to be okay? Like it was what happened in the modern era of investing, going back to the 1920s. I don't know. I just think it's interesting. Don't take it out of perspective. Now, your bonds are way down. I will tell you that. Of course, if you've been adding to them, like your dollar cost averaging, you're freaking loving life, dudes. That's, I don't know. That's a lesson to be learned here for me. I'll do another video on that. All right. See ya. Love to hear your thoughts.